The Australian Financial Review.
Hello, I'm James Thomson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today again, filling in for Anthony, is the Editor-in-Chief of the Financial Review. Unlike Jacinta Allen, he's still got the full support of the AFR caucus. It's James Chessell. How are you, James?
Feeling a lot more chipper than the business case for the suburban rail loop, James.
Fantastic. Well, this week we unpack the national implications from the coup that brought down a Victorian Premier. We examine the RBA's big interest rate dilemma between sticky inflation and falling house prices. And we try and unpack a week where it all got a bit strange in the AI boom. In fact, James, let's start there. Now, for most of this year, we've been talking about the hottest trade in the world, the staggering rise in the value of AI computer chip makers and memory chip makers. But suddenly it's all gone a bit pear-shaped. Chip stocks are down about 25% in a matter of weeks. The NASDAQ, which is the big tech index on Wall Street, briefly went into correction this week, and shares in Meta Platforms, which is the social media giant that owns Facebook and Instagram, they plunged after it delivered earnings growth that was dwarfed by its big spending on AI infrastructure. James, do you think something's shifting a bit here?
JT, something is definitely shifting in terms of market sentiment, and it's a good week for the prophets of doom, such as yourself, who've been yes. saying this moment would come. If you do your usual Google search of the headlines, there's some pretty predictable ones out there. BBC, for example, does this spell the end of the AI revolution?
Oh, that's my sort of jam.
Yeah, exactly. I think the truth probably sits somewhere in between.
Totally.
I'm sorry to be boring, but it's usually the case. I would sort of trace some of the jitters back to the Shanghai AI conference that took place in July 17 to 20. Yeah. It was a really big deal in China. As is often the case, they unveil some pretty cutting-edge innovations, including on sort of agentic AI. Now, whether or not you think it's creeping closer to what the US firms are capable of is a matter of debate, but it's certainly very competitive there. And I think some of that nervousness has played through. But at the same time, it's colliding with valuations that were frankly very, very bullish. And as you know better than most, there's a lot of money still sloshing around global markets everywhere. We saw it with Musk's float a little while ago, and that's propelling some valuations higher than they perhaps should be.
Yeah, I think that's right. I don't think that the AI boom's over by any stretch of the imagination. There's so much spending going on. There's so many advances in what the technology can do. Okay, we're not seeing the deployment rates, but so much is shifting every 6 months. I thought it was really interesting, James. Rio Tinto's new CEO, Simon Trott, well, he's new. He's been there, I think he's 9 months in the job or something like that. They had their half-yearly results this week, first result of reporting season. And the pitch was, hey, we're an AI stock too.
Forget NVIDIA.
Exactly. He had a good number to back it up. 70% of the stuff that goes into a data center, Rio Tinto will sell some of the ingredients, whether that's iron ore for steel or aluminium or copper or lithium for the battery that's out the back. So Victor Schvetz, Macquarie strategist, he makes the argument that everything's an AI stock now. And when you see Rio Tinto pushing that line, I think we've probably entered the realm of everything is an AI stock now.
I agree with Victor. The great copper rebranding from Rio, and to be fair, BHP was onto this very early, is a clever piece of marketing. I think there are some substantive points behind it, and these vast data centers that are being built in all sorts of places, including Australia, will use a lot of copper. So I'm not overly cynical about it, but it is interesting how they've pivoted to sell that. That's the mining sector. And it's interesting, the Australian share market, it's a very short period of time, is probably doing better than most of its peers for this financial year. Places like the US, which has got all the headlines, but also South Korea have borne the brunt of this tech downturn, while little old Australia becomes a bit of a safe haven. So the miners are onto something. But one thing I want to add, JT, if you go see companies that are not directly contributing to the construction of data centers, for example, or chips or whatever. There's an interesting conversation taking place, and I'd be interested to if you've picked it up in your conversations with CEOs. But a lot of the ones I speak to are saying, look, we have AI, it's being used extensively across our business, but they're a lot more cost-focused now. I think they haven't quite seen the benefits that they're expecting in terms of efficiency and productivity, and cost is a word you didn't hear as much 2 or 3 years ago. It's being uttered a lot more. And I think it's not the reason valuations have fallen, but I think it adds to a moment of reality for the sector.
Yeah, I think that you're absolutely right on the cost thing. 12 months ago, everyone was spraying AI magic dust everywhere.
Left, right and centre.
Yeah, exactly. Everything needs to be AI now. I've heard in the last little while from CEOs, we'd like to find the 3 projects that are really going to benefit from AI. That's where we'll put the investment. That's where we'll buy the tokens for the really good models. That sounds eminently sensible to me. You have a crack at everything and then you narrow it down to a few things that actually work. And that's probably how, if you think about life in general, most of your productivity comes from doing 2 or 3 things better, not trying to do 45 things better. So that's the natural maturation of this stuff. It's just happening in such rapid periods. We've gone from spraying AI dust everywhere to, what are the 3 things that work in like 9 months. That's very quick for the deployment of a technology. And that's the thing about this AI world. Everything is so quick.
It's the world we live in now, and it's amplified by the speed of the markets. Ironically enough, powered by AI reacting to bad news. So, we've got to get used to it, and we see it with the stock market in Australia. We've got an earnings season coming up, and it'll probably be even more volatile than the last one, and that one was pretty volatile.
Absolutely. And that'll be down to AI listening to earnings calls and making snap judgments, as you say, faster than ever. So this is the world. Yep. This is the world. You've got to deal with it.
Speaking of AI, we've had one of the first real investment blow-ups of this age on Thursday night when a hedge fund called Situation Awareness blew up. Now, I hadn't heard of it, but I know you've looked into it. So can you explain what is going on here, please?
This is one of the great stories. You get these blow-ups every now and again, but this is a cracker. He's a 24-year-old German called Leopold Aschenbrenner. He loves a turtleneck sweater. Up until 2024, when he started this hedge fund Situational Awareness, he'd never actually run an investment firm. So
what could possibly go wrong?
But he had worked at OpenAI for a short stint. So perfect credentials. Leopold, he writes a manifesto called Situational Awareness, where he basically says the whole world hasn't cottoned on to how big AI is going to be, but a few people, maybe 1,000 people in Silicon Valley and San Francisco, they have situational awareness. And guess what? I am one of them. Come, invest with me. And he rolls off some of the biggest returns you've ever seen. He buys the picks and shovels, the memory stocks, neo clouds, very concentrated portfolio. But since starting the fund in June 2024, he's up 1,000% to the end of June this year.
Goodness.
Year to date, just this year, he's up 440%. He is flying. There's social media accounts dedicated to tracking his every trade. Money flows in. He ends up with $20 billion in funds under management. Again, this is a 24-year-old bloke in a turtleneck sweater who's never run an investment firm. And the Wall Street Journal's writing about him as if he's some sort of new wunderkind.
Yep.
In 1 month, it's all blown up. So on Thursday night on Wall Street, Citadel, another big hedge fund, was forced to step in and buy his public equity portfolio for $16 billion and basically bail him out because, shock horror, he's used debt, leverage to try and juice his returns. And he's got into a bit of trouble when we've seen all these memory stocks and chip stocks dive in the last month.
There's a margin call of sorts in there somewhere?
Essentially, yeah, that's been the problem. But again, the speed of everything with AI is amazing. To June, he's up 439%, and now he doesn't own any public stocks. He's still got some private investments, including a $5 billion stake in Anthropic, but this is the biggest story on Wall Street at the moment. And we saw this rally on Thursday night in chip stocks. Some of the stocks that he owns were up 20% in a night because everyone was fearful that there'd be a fire sale of his portfolio, might have to be liquidated. So, as you said, it's the first real investment blow-up of the AI age. But it's one of those ones where you look back and you go, gee, should we have really given our money to a 24-year-old who'd never run a hedge fund before, never seen a market cycle before, only had ever worked at OpenAI, and his other place of employment was FTX, the crypto firm owned by Sam Bankman-Fried, which went under?
Yep.
In hindsight, it looks pretty obvious, but I guess this is what we're going to see every now and again with this trade. Fortunes are made very quickly, and they're lost very quickly.
It reminds me of what David Solomon, the Goldman Sachs CEO, said at our AFR summit earlier this year, which is there is a whole generation of people that haven't been through a nasty turn in the credit cycle.
Yep.
So I know this is a emblematic story of a new age, but at the heart is something as old as time, which is he borrowed too much.
Yep.
And when things turn, debt becomes problematic, obviously. And to your point, it's a new experience for some people, and it's going to be interesting to see how it plays out.
Yeah, absolutely. What a story. All right, James, let's get on to our first topic. And the AFR newsroom was in full flight this week as Victorian Premier Jacinta Allen was forced to walk the plank, replaced in, well, chaotic circumstances, really, by her deputy Ben Carroll, who immediately tried to distance himself from Allen by making a series of promises that could have come out of the AFR wish list. He's promised a royal commission into the corruption in the construction sector, a better relationship with the business community, and a promise to respect every dollar of government spending. Now, James, speaking as a Victorian, this all sounds pretty good to someone who got used to Jacinta Allen basically sort of sneering at any criticism and saying, go away. Admitting your problems is always the first stage in fixing them. But am I too optimistic here? Should I have any hope that Victoria is turning the corner? Or is Ben Carroll more of a desperate roll of the dice for Labor with the state election coming in November?
Commiserations on being a Victorian, James, but we'll leave that to one side. You can't fault Carroll for what he said after he was elected, and it was a very sensible thing to say. You know, I'm not Jacinta Allen, I'm not Dan Andrews, and I think the second one's probably more important than the first one.
Totally.
But there is definitely a view among very influential Labor people that he is being instated to save the furniture, that a result at the election where they hold on to 30 to 35 seats would be good. And beyond that, you know, they're even saying a bit of time in the wilderness would be important to reset the party, which has economically and politically lost its way in recent years. So when you talk to the hardheads, there's not a lot of optimism. That's not a personal criticism of Carroll, but I think it's important to be realistic about the expectations within the Labor Party and the enormous political challenge he has in front of it. You know, JT, normally state stories and state economic stories for a national newspaper like the AFR do reasonably well, but not huge business for us. Victoria's been a massive exception for a long time now. Our readers can't get enough of it. I know when I'm in Victoria, I have every person giving me their strong opinions about how things are going from the business community and elsewhere. And even when I'm in New South Wales and other places, I get feedback on Victoria. It's galvanised a certain part of the Australian community, and they've become, you know, in an understandable way, pretty fixated. Why do you reckon this is? What is it about Victoria that has interested so many people who don't actually live in the state?
Well, I think part of it's personality driven. So Dan Andrews, you know, became such a strongman figure during the pandemic, and then we went to Jacinta Allen, who's sort of felt like she's been under fire. There's been a bit of chaos in Victorian politics on both the Liberal side and the Labor side, and we should give a shout out to the AFR's Victorian political correspondent, Sumaya Alambi. She absolutely streeted the field this week with all her breaks on how Jacinta Allen's downfall occurred.
Absolutely.
But I think that the big story is it's one of the big engines of the Australian economy. And we can't have a big engine like this spluttering. And what we've seen over the last probably 5 years since the pandemic, Victoria's become a really hard place to do business. We hear this constantly from the likes of Wesfarmers CEO Rob Scott, SGH CEO Ryan Stokes, all the retail CEOs. So we've seen this increase in crime. We've seen an increase in taxes. We've seen this ongoing corruption story with the big build. which goes to the heart of, why can't we drive productivity in this country? Well, part of it is because we can't even get these big government projects going properly. So I think the nation looks at Victoria and says, that's where we don't want to be. That's the shining example of where things can go wrong and where, great opportunity and great potential sort of gets wasted or hidden under this, political mess. So I think that's why it resonates around the country. We've got this decline in living standards around Australia. People look to Victoria and say, that's where we don't want to be. That's what we need to fix first. So that's why I've got a little bit of hope that Ben Carroll's at least recognising some of the problems. But as you say, he's there to save the furniture. The election's rushing up. How much Carroll can actually do before the election's a really good question. He's got 4 months or something, 3 months, really.
Yep.
But this election, it's a big test for the idea that politics in this country is now sort of a genuine three-cornered contest. Labor, One Nation, and the Liberal National Coalition. I mean, I can't think of a more exciting state election that we've had for a long time here, James.
Arguably the most interesting state election of our lifetimes. One Nation sort of made its move in the polls at the start of the year, the calendar year. We have had a South Australian election since then, but the popularity of the Premier there, Peter Malinauskas, meant that it was probably not as influential, One Nation, that is, as it would be in other states. In Victoria, it will be a proper competition between the three parties. Samaya, you mentioned her before, and I want to endorse your words. She's been an absolute superstar. One of the things she's written about is whether One Nation will be as organised as it should be. And although there's a part of me that feels like we always have these conversations and then they tend to do quite well regardless. So maybe it will be a factor, maybe it won't. I think the coalition or the Liberal Party, Liberal National Coalition in Victoria has stabilised, but they still have a bit of work to do. It will be really, really interesting to see how it goes.
Yeah. Labor's got such a big lead. Like, they should really be in prime position, particularly if Carroll can sort of turn things around a bit. But one of the questions down here is, can the Liberals and One Nation get the right type of local candidates?
Yep.
Having the sort of halo effect is one thing, but you've got to get the people on the ground, right?
Yep. And a lot of Labor seats have pretty healthy margins as well.
Yeah.
The electoral arithmetic is pretty interesting. JT, we are the AFR. This is the Chook podcast. We've got to talk economics for a little bit in terms of Victoria. And I wouldn't mind touching on the suburban rail loop as well. Here on the Chook podcast, we don't talk about operating surpluses. We talk about the real thing. And hot off the press is a piece that Saul Eastlake, the noted economist and Victorian economic expert, has done for us. He reckons Victoria's general government net debt rose by about 641% since Labor came into office, and it's expected to rise by an extra 21% on top of that by the end of the 29-30 financial year. One more stat. That would represent almost 25% of Victoria's gross state product.
Yikes.
Which is well above the peak at the end of the Kane-Kerner years before Kennett came in. So we're in a difficult economic position. What does the government do to alleviate the pressure on the budget, particularly when every other state election we've seen has been characterised by sugar hits and cost of living handouts?
Geez, you're harshing my buzz here about any optimism I might have for the state with those statistics. Look, I mean, you mentioned the suburban rail loop. That's the sort of government's signature infrastructure project. It's a weird project.
Yeah.
Like, the first stage is due to be, or the second stage, I think it is due to be completed in 2053. There's no real costings to this thing. Like, there's vague costings that, it's in the tens of billions. Perhaps by the end of it, when it gets completed in 2212, it'll have cost hundreds of billions of dollars. So I think that might be a place for Carroll to start. Does he pull back on that? There has been a sense that Carroll doesn't love the whole of the suburban rail loop project. He would prefer that we focus on a train link to the airport.
Where's his electorate again, JT?
Oh, that's a good question. In the northern suburbs, the train might even go through there.
You're absolutely right. He's not a fan of the suburban rail loop, which I think technically went through cabinet under Andrews, but people will say it was a rubber stamp exercise.
Yeah.
So there's never been a proper business case for it. I think you're undercooking the costs. We're looking at well over $40 billion if it ever gets built. There's a really interesting question. Current contracts signed account for about $7 billion. Okay. There are estimates that you could maybe get out of them for, somewhere around the vicinity of $2 billion. They might be optimistic, but less than that $7. Do you break those contracts, walk away, deal with the sovereign risk arguments, which I'm never a fan of, but you save 40 minus 2? Or do you stick with the contracts that have been signed?
And then the other part of that equation is Victoria is still going to keep growing. It's going to be one of the most populous states in the country. Is that infrastructure needed over time? There's still that argument that I think about. I don't know what the answer is here, James. I think in the near term, there's going to have to be a review of that suburban rail loop.
Yep.
Find out if the thing's worth partially doing or fully doing or doing in stages, and at least get everyone on the same page about it. But I think we need to think about government spending more broadly. The Victorian government's been profligate, hasn't done a lot of hard work on reducing that spending after COVID. I think that's probably the place to start. But I think you're right. We're going into an election in 4 months, as if every party's not going to promise every populist sugar hit under the sun. I don't reckon there'll be much talk about cuts.
No.
Because cuts are unpopular. So this is going to be a bit of a mess, and I fear Saul Eslake's going to be writing another column after the election saying, well, that didn't work, things have got even worse.
So a second fishing rod for every Victorian child. We are jealous about that one in New South Wales, I will concede. Okay, James, let's move on to our second topic. It's been a fascinating week for economics data. I feel we say that a lot, but it's definitely true. With cooler than expected inflation numbers taking the heat off the RBA to raise rates. Probably. We also had more soft numbers out of the rapidly weakening housing market, which plays out in different ways across the economy. Let's start with the inflation numbers, JT. Were they as good as expected?
Oh, look, I mean, the headline numbers were very helpful to the RBA. Headline CPI eased from 4.1% to 3.9%. That's good in itself, but it's well below the RBA's forecast of 4.8%. So that's great. The trimmed mean inflation's holding at 3.6%. Again, below the RBA's forecast, but still well above the target range of 2 to 3%. So, yes, I think this is good. It probably takes the pressure off the RBA to act immediately. I think there's a bit of devil in the detail, though. If you look at where the price pressures are coming, yes, we've seen lower fuel prices and the government's temporary cut to the fuel excises. That's helped take the heat out of prices for imported goods. But services inflation is still running hot. So this is what Michelle Bullock has referred to as the inflation problem that existed before the war in Iran. That is still far from solved. So the RBA's got this really tough sort of question. Does that inflation problem get solved by the rate cuts it's already delivered, or do we need another one? I don't think we can discount one more rate hike at this stage. I think we're too early for that.
I think it's a real possibility.
Yeah.
I think the numbers this week have obviously pushed that event, if it happens, back further, but it's something you can't rule out.
No, totally. I thought the AFR's economics guru, John Kerr, he really nailed it with this line that summarised the RBA's interest rate dilemma as being between sticky inflation on the one hand and then falling house prices on the other. Now, clearly, Michelle Bullock is most focused on getting inflation down. That's her number one reason for getting out of bed in the morning. But this week, she did call the housing market test a quote-unquote litmus test for the economy. And I guess the implication here is that if housing slows very sharply, then the economy is slowing sharply too. So she does have this bind. While the RBA is not too worried about house prices, she'd hate to be forced to be raising rates because inflation is still too high when house prices and the economy are coming off the boil quickly. Now, it's a really tough place we've got ourselves into here.
There are all these contradictions in that debate about housing in this country. We want housing to be more affordable, and housing should be more affordable. But when house prices begin to decline, which we've seen in stark terms recently, there are consequences to that. There are political consequences, and then there are the economic consequences, which is what the RBA looks at. And at a time when, if you talk to people in the construction industry, they say residential construction has basically ground to a halt in a lot of ways. And this is our weekly reminder that supply is at the heart of the problem of housing affordability. There's not going to be a quick fix. And then the other thing, James, is you have a lot of people who bought houses recently who are now experiencing what it's like to be in negative equity.
Yep.
And then you have older cohorts of voters, Gen Xers, for example, who are sitting there going, well, I'm not going to get as much as I thought I would for my house. I might have to work longer. And that's feeding into this really interesting trend you've seen in the polling over the last 18 months or so, which is this sense that life's going to be harder for the next generation, which we've gotten used to, but is actually a relatively new feeling among the populace.
I'm picking up the same thing, James, about just how quickly the housing sector has slowed. I wrote this week about it's anecdotal evidence, which is always dangerous. But, one of Sydney's prominent auctioneers last Saturday, he went 0 for 6 in terms of selling houses.
Yeah.
But he said there were no registered bidders. So nobody's wanting to come in and say, oh, this is a good time to catch a bargain. Everyone thinks prices are going to slide further. And yes, there's a wealth effect which goes to the economy, but there's also a big ecosystem around housing activity, mortgage brokers, conveyancers. There's a whole world there that...
Think about the real estate agents, JT.
Yeah. So I'm just as I was saying that, I'm thinking,
you didn't seem
I'm not getting any sympathy here.
Drop them off your list.
Yeah, that's it. But our housing obsession means that is a sort of big part of the economy, isn't it?
Yep.
It's an important part of the economy. And when it cools, we all feel it in different ways. That's the tough thing for Bullock. She can't focus on house prices, but she can't take her eyes off them, I guess. Even if prices fall 20%, they'll only be back to where they were in March 2023.
Yep.
So we can cop a fair bit of pain here in terms of house prices before it really starts to bite. But there is an impact on the nation's sort of psyche and confidence, which is interesting to watch.
Indeed.
I reckon I'm a November hike.
Yeah, you and Ant like to be very specific, don't you?
We do. Michelle Bullock isn't alone in fighting this problem. We had a really interesting week from the Federal Reserve, America's central bank, this week, where they were expected to keep rates on hold, and they kept rates on hold. No great problems. But then we saw something very strange in the bond market. The long bonds, the 30-year US Treasury bond yield, went to the highest it's been since 2007. And that's basically investors saying, okay, the Fed's not too worried about inflation, but we are. We don't like where the Iran war's heading. We don't like the signals we're getting out of the sticky inflation that's still in the US economy. So even if the RBA remains on hold and the Federal Reserve in the US remains on hold, money markets are pushing the cost of borrowing up, and that often has ramifications that we don't see in weird places. So just keep an eye on the bond market. It's sending us a signal. It does that from time to time, and sometimes those signals are tempered by better news out of Iran or whatever it is. But the cost of borrowing and the problem of inflation, it's not going to go away quickly. So I think that's an important lesson to learn out of all this.
Yeah, good point, James. And the only thing I'd add is, remember, we know from the early part of Trump's second term, he does pay attention to bond markets. It is something that may actually impact his thinking.
Yeah, well said. All right, we'll be back after the break. We've got a lot of exciting data to get into next week. We'll have a look at some of that in just a sec. Welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Well, we were just talking about house prices, James, and on Sunday/Monday, we'll get the latest data on what prices did in July. The daily indexes do not point to happy news, but I think that's probably priced in I'll be really interested in what we're seeing in terms of inspections, stock on the market. Those sort of forward-looking signals are going to be really interesting here.
Indeed.
Reporting season's underway. As I said, we had Rio Tinto's half-yearly earnings this week, but it's a fairly light start to reporting season next week. Pinnacle Investment Management, which is a collection of hedge, fund and other investment managers, is up on Tuesday. And then on Friday, we get News Corp and REA Group. Now, this could be a little bit interesting, James. We've seen the shares of online real estate classifieds players really under a lot of pressure from AI disruption and on top of that, the softening housing market. So it'll be interesting to get a bit of a read through as to what REA is seeing in terms of where housing activity is at. And I guess AI disruption's at too.
JT, fair to say the mood ahead of profit season is not one of wild optimism?
Yes, I think that is fair to say. We're actually going to get a reasonable result in terms of profit growth.
Yeah.
Like the last 3 years, total profit growth across the index has gone backwards. This year, it'll go up. Profits will go up by about 12%. But I agree. This might sound weird. There's a little bit of a fear about what we might see. The size of the share price moves in most recent profit seasons have been so wild. Everybody is just braced for chaos. You know, we saw some stocks move by 25, 30% when they surprised on the downside last profit season. And I think most strategists are worried that we are going to see that sort of volatility again. So it's going to make for a pretty wild ride.
One of the ironies of that is that AI has contributed to the volatility. It seizes on phrases and words and enables people and machines to trade a lot more quickly than they used to. But on the other hand, companies are now turning to AI to finesse their results by asking AI to anticipate what the aggressive AI will do with their language. And, you know, I was talking to one of those companies that got bashed up pretty severely in the last result season. And look, this is just a tiny little anecdotal thing, but the AI was saying to them, you got to stop using certain words that connote doubt. Like, we don't want albeit. That, you know, that was the one that stuck in my mind. The word albeit is not a word we want to hear in the CEO's commentary. So it is getting to ridiculous levels of fine-tuning for some of these poor CEOs and investor relation teams.
I'm not sure that's great for the market. I mean, what we want is
it's definitely not great for the market. It's not great for anyone.
We want honest communications. All right, we love questions here on the Chanticleer podcast. This week our question is from Phil, who was originally from Brisbane but's now retired and living in Bali. If you've got a question you want to send in, you can email us at chanticleer@afr.com. And we love it when you send us an audio question. Just record a voice memo on your phone, include your name and where you're from, and email it to us. And there's also a widget on the bottom of all Chanticleer articles at afr.com that allows you to send a question in too. Well, here's Phil from Bali, and I'll get our producer Mandy to do the honours.
Thanks, JT. JP Morgan have reported the 6 Ds which will affect the world economy, namely deficits, deregulation, decarbonisation, depopulation, deglobalisation and de-dollarisation. Which Ds will have the biggest effect in Australia compared to other countries?
I love this question, Phil, and I am very interested to hear what you say here, James.
I don't really understand properly de-dollarisation. I can barely say the word, so I'll leave that one alone. It's a great smorgasbord. I would pick decarbonisation in the sense that Australia, I'm not the first person to say this, we had Ken Henry in the paper this week, but we really do need to sort out our energy situation. We didn't mention energy in relation to Victoria, by the way, and they're a bit of a canary in the coal mine on that front as well. As always, there's a real opportunity, particularly if you get alongside the growth in data centres, for example, to use our abundant natural advantages in terms of solar in particular. But the quality of debate in this country continues to be subpar on this. The government's costs remain high, and policies such as the safeguard mechanism and the capacity investment scheme are not moving along particularly smoothly, I would say. There's a lot of angst in the business community there. So, as usual, big challenge, but big opportunity. And then the second one, JT, and you can build on this. I'm not Ross Gittin, so I do believe deficits actually matter. You know, we talked about Victoria's budget position. I think public spending and debt in Australia will become a bigger and bigger issue. I know certain people like to say we're doing okay by OECD standards, and on one level that is true. And I think, particularly if the economy slows and the cost of living issues continue, there will be more focus on the balancing the budget. Do you agree, or do you think it remains a second order issue?
No, I think you're right, James. I think deficits is the subject that ties a lot of these together, because the challenge of deficits and the challenge of the debt that countries are running up sort of speaks to what our investment returns are going to be doing for the rest of our lives. I mean, probably higher deficits will mean higher inflation and higher interest rates, which will weigh on investment returns. So I think that's a huge issue. And the reason for those deficits is also going to be important. I mean, big deficits go to big government spending, which will be required to, reshore manufacturing, to increase defence spending, to increase economic resilience, which includes things like energy. So how we manage that and how we manage those deficits is going to be fascinating. I guess the other one that jumped out of me was depopulation.
Yeah, that's a good one.
Which I guess is another way of saying demographics, but the idea that populations are going to shrink, and particularly working populations are going to shrink, I think that's really important. Now, I don't know, maybe AI solves that problem for us, because it's going to come in and, create this productivity boom, and we won't need to worry about depopulation so much. But the other way of looking at it is that, for various reasons, there could be a bit of a battle for people as Western fertility rates continue to drop and populations drop away, working populations. We're just going to need to attract more people into our economy, which is a very different argument to the immigration debate we're having at the moment.
It's a pretty hard ask for the government to raise immigration at the moment, and depopulation is a good point. You've got ageing population mean the health costs rise, and if you look across the budget estimates, it's just getting bigger and bigger, which goes back to the deficits point, and economic growth, and this is something that predates the current government, has been propped up by immigration. Per capita growth has not been great. So were that to slow, you've got an economic growth problem on your hands.
Phil, it's a great question, and I think I can see a 6-part AFR series coming out on the 6 big Ds, because they're all really important. They all speak to each other. And the other thing is, I think both James and I need to figure out what de-dollarisation is. So we'll need an explainer on that as well.
We probably need to go to Bali to discuss that with Phil directly, I think.
All right, James, thanks so much for filling in for Anthony. He'll be back next week. And just to emphasise, this hasn't been a leadership coup like in Victoria. So, Anthony, we'll welcome you back.
We're all about the status quo here, JT.
Deputy James Chessell will step down and get to work on Jacinta Allen's statue outside Parliament. I do think it's going to be another big week, though, James, next week. We're heading into reporting season. More big news, more big economic data. And I reckon there'll be another twist and turn in the AI story next week too. So thanks for joining us, mate.
Thanks, JT.
Thanks, everyone. We'll see you next week. If you like the podcast, share it with a friend or give it a review, as it helps other listeners find us. And don't forget to follow so you'll never miss an episode. At The Financial Review, we investigate the big stories about markets, business and power. You can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson, and James Chessell. It was produced by Mandy Coolin. Our theme is by Alex Gow, and the head of premium content is Fiona Buffini.
The Australian Financial Review.